Everyone. In the previous session with respect to bank audit, we covered the different topics of an introduction to bank audit. We saw the regulators, what are the different types of bank. Then we saw what are the features of banking, what are the services that is provided by the banks. Then we came to what are the different audit processes, what is the engagement, what are the contents included in your engagement team discussions. We saw what are the different types of reports that has to be given by the auditor. And then in addition to the basic three reports which are given, we have several other reports, supplementary reports which has to be given. Then we saw the basic aspect of income recognition policy with respect to bank. Then we came to the form and content of the financials. So what is the form and content like Form A and Form B with respect to balance sheet and financials as per your Banking Regulations Act. And also they have to stick to the disclosure requirements as per your Companies Act section 133 and as per the accounting standards that is issued by ICI. So that is a basic form and content of FS. Then the next topic, we are starting today's session with the audit of accounts, appointment of auditor, remuneration to the auditor, then auditor's report, few other concepts will be going a bit in detail in today's session. So we'll start with today's session. So today's session mainly focuses on the audit of accounts. So I told you what is the form and content of the FS or financial statements of a bank. Now, these financial statements, your balance sheet, your P&L, your disclosures, everything should be audited by a person. So this audit person who is auditing should be any person who is qualified to be eligible to be the auditor of a company. So we'll go back, we'll see what are the limitations or what are the measures or what are the eligibility criteria for appointment of an auditor to a company. So if the person is fit to be auditor of a company, he can be appointed as an auditor of a bank as well. So it's a banking company basically. So it should be audited by a person who is eligible to be an auditor of a company. Now, so that is a basic thing. So appointment of auditor. So when I told about the audit of accounts, so since a person who can be the auditor of a company can also be appointed as an auditor of a bank or banking company, the powers of the auditor will also be similar to that of the powers of an auditor, company auditor. Say powers of the auditor in the sense the right to verify the documents, records, other financials, books of accounts. So same powers, whatever the auditor has for a company or company auditor, the same powers will also be applicable here. So audit of accounts, basically any person who is eligible to be an auditor of the company can also be an auditor of a bank, and the powers of the auditor will be same as that of the powers of a company's auditor or company auditor, verification of books of accounts, documents, records and all. Now, access to the books of accounts, all the powers whichever is given or vested in the company's auditor will also be vested here. Now, coming to the appointment of auditor. So, next basic main concept is with respect to appointment of auditor. So, I told you any person who is eligible to be an auditor of a company can be appointed as an auditor here. Now, before appointment, basically appointment I can classify with respect to three types of bank. Three types of banks. That is, one is with respect to normal banking company, one specifically with respect to a nationalized bank, and one with respect to SBI. So this for any banking company take for that matter, they say for example, leave apart the nationalized banks and SBI. So what happens is any banking company, it will be appointed by the shareholders. So this applies for all the banking companies, appointment by means of shareholders. Now, take nationalized banks for example, other nationalized banks other than SBI. So here the appointment of the auditor takes place through the board of directors. So, but however, the RBI has to approve the same before the actual appointment is made. But in nationalized bank, the appointment takes place through the board of directors. RBI approval is also required for that. In other banking companies, it will be through the shareholders. Now, with respect to SBI, here what happens is, here the appointment is done by the CNDG, Controller and Auditor General, after consultation with the central government. So SBI, it is done by CNDG after consultation with your central government. Nationalized banks, other nationalized banks, it will be done through the board of directors. RBI approval is also required. And whereas for subsidiaries, for SBI subsidiaries, it can be appointed by SBI itself. Now, basically, it is done by the controller and auditor general for SBI. For nationalized banks, it will be done through the board of directors. For other banking companies, it will be done through the shareholders at the AGM, at the annual general meeting. Now, this is with respect to appointment. So basically, audit of accounts, it has to be audited by a person who is fit to be the auditor of a company. Powers of the auditor is same as the powers that is conferred to an auditor of a company. Access to the books of accounts, records, verification of books of accounts, and documents and vouchers. Now, appointment, basically I have divided into three. One is with respect to banking companies, one with respect to other nationalized banks, and one with respect to SBI. So banking company, shareholders can appoint. Nationalized bank, it is acting through the board of directors. RBI approval is required. SBI to C&AG after consultation with the central government. So these are the three different bifurcations with respect to appointment of auditor. Now, next is the remuneration aspect. So remuneration of a banking company, it is decided as per section 142 of your Companies Act. So it is as per your Companies Act, section 142. Now, for other nationalized banks or SBI, it will be decided by RBI. So remuneration for with respect to a banking company, it is fixed as per the section 142 of Companies Act. Here for other banks, nationalized banks as well as SBI, it will be decided by RBI after your consultation with central government. So this is again another basic classification. For nationalized bank, who decides? Banking company, who decides? One is with respect to Companies Act. So banking company, the appointment takes place through the shareholders. Remuneration for the auditor is by through section 142 of Companies Act. For nationalized banks, appointment takes place through board of directors. RBI approval is required. Remuneration is fixed by RBI after consultation with the central government. SBI, the appointment takes place through the C&AG after consultation with central government. Remuneration is fixed by RBI after consultation with central government. So these are with respect to your appointment and remuneration of the auditor. Now, coming to auditor's report. So what are the different types of reports that the auditor has to give? I told you basically there are three types of reports. Statutory or audit report, you have your tax audit report, you have your long form audit report. Now, in the report, whom all has to be included as a reference. Now, basically in case of a nationalized bank, auditor is required to make a report to the central government. So, central government, the report has to be made and few aspects has to be covered by the auditor on certain audit areas. So, now we will see what are the different areas that has to be addressed in the report to central government. So, first thing is whether the financials, so this is one common aspect that we even give in our statutory audit report, that one thing is with respect to whether the financial statements are presenting a true and fair view with respect to the affairs of the company. So, the affairs of the company are done in a fair manner where the financials are representing or giving a true and fair picture of the affairs of the company, banking company. Now, this is one thing of the particular bank, I would say, bank. Then, with respect to transactions. So, another inclusion in your report will be with respect to your transaction. So, whether the bank is approving transactions or whether any transactions that is done by the bank is within the powers of the bank. So, say for example, I told you there will be a delegation of duties and this will be done or this will be given by your administrative officers, taken care by the administrative officers. Say during the audit, you have to verify whether each and every transaction, loan disbursement or it is within the power of that particular person or particular employee or particular manager. So within the power of the bank, whether the transactions are taking place or not. That also has to be mentioned clearly in the report. That is the second aspect. Third aspect is, I told you the banks have branches that is geographically spread. The different services are provided across the globe, across the nation by means of all these branches. So when I am doing the audit of one particular branch, whether I am getting the returns, I told you when a company has different subsidiaries, a person doing the audit of that particular, he needs to get a quarterly returns from different branches. So here also in your bank audit also, whether the returns are received from the branches or offices have been adequate, if it is adequate or not. So whatever returns, whatever documents you receive from the branches and the other offices, whether it is adequate for the purpose of audit. That also has to be mentioned. And then any other matter which the auditor feels needs to be brought to the notice of the central government with respect to functioning of the bank, whether any irregularity is observed, all these points also I can include as a part of the audit report. So whenever the auditor is giving a report to the central government, in his audit report, there are few aspects which need to be clearly mentioned. One is true and fair view of the financials, of the affairs of the particular bank. Second is with respect to the approvals and transactions, whether the transactions that is being carried out in the bank are within the powers of the bank. That is the next aspect. Third one is during the course of audit, whether the auditor is able to obtain the returns from the different branches and whether it is adequate for the purpose of audit. So that also has to be mentioned. Apart from these three, any other matter that comes to the notice of the particular auditor and he feels that it should be brought to the notice of the central government as well. It could be any kind of fraud or any kind of irregularity in the functioning of the branch or any kind of risk that is encountered. All these aspects I can also include as a part of my report. So basically the auditor's report to the central government should touch upon all these 4 points. Now, similar to the auditor's report with respect to central government, there is also a reporting with respect to Companies Act and with respect to RBI. So this is with respect to central government. Now, we will see the other reports also. So again, in the format, so I gave what are the contents that should be included. Now coming to the format. Now the format should, whatever report, audit report that is being issued should comply with the standards on auditing. That is the basic criteria. Now, in the particular report, he should include information with regard to what are the branches that he hasn't audited, number of unaudited branches. Now, it is not enough that he mentions the number of unaudited branches. Say there are 10 branches which is not audited by him, but also he has to quantify or give the value of advances, deposits and total income and interest income and expenditure with respect to these branches. So in the audit report, total number of unaudited branches, total advances or deposits, interest income, interest expenses, he has to quantify and then mention it in the report. And also other matters covered by section 143. And one important aspect here is CARO will not be applicable. So in CARO, when you have seen the exceptions, CARO will not be applicable. We saw banking company. So again here, your CARO is not applicable here. So other than that, you have to mention provide the other details like unaudited branches, quantification of advances, your deposits, total. So advances and deposits, 2 basic functions. Then comes your income and expense part. So income with respect to your advances, income will be your interest received. So interest income. Then with respect to deposits is interest paid or interest given to the customer. So again interest expense, it's an expense for bank. So those what are the interest income and expenses with respect to the banks which he has not audited. So amount has to be given and also other matters covered by section 143. Now these are the things which has to be included in the report and this report has to comply with the requirements of standards on auditing. So that is a basic criteria. Now, this is a normal report, statutory report. Now, we also saw another type of report called as a long form audit report. So what is a long form audit report? LFAR. It is called as a LFAR. What is long form audit report? So this is as per the RBI circular. So this is not as per the statutory requirement. This is as per the RBI circular. So certain matters which has to be disclosed by the bank and they have been specified by RBI. So as per the RBI circular, certain matters which is required to be specified with respect to the bank, functioning of the bank and how the auditors deal with that, they have to mention in the LFAR. So basically LFAR is actually a requirement of the RBI as per the RBI circular. So here again you need not give an executive summary. There is no executive summary portion in your LFAR, but any key observations like key matters, we already saw in our audit report session what are key audit matters. So similarly any key observations, all those things, it can be actually provided in the LFAR. Any key observations that is obtained by the auditor, it can be given as a summary here. And the due date is it has to be submitted before 30th June every year. So every year before 30th June, it has to be submitted. It is as per the requirements or the particular specified by RBI. As per the RBI circular, we are giving another report called as a long form audit report. So you can actually mention any key observations which you have which you have encountered during the course of audit. Also, you can mention there. There is no particular column or executive summary that is there, but it can be given. So that is another important aspect with respect to LFAR. So LFAR, as I told you, it is as per your RBI circular specified by RBI. It has to be submitted before 30th June of every year, and normally you don't have to give a executive summary, but any key observations, significant matters which comes to the notice of the auditor during the course of audit, he can mention it here. This is the second type of report, your long form audit report. Now, as I told you, reporting to central government, there are two other reportings. One is a reporting to RBI and one is a report as per your Companies Act. So Companies Act, we would have seen like what happens when there is a fraud that is being reported and the quantification of the fraud with respect to the amount involved in the fraud, how it has to be reported. Now, similarly, there is another reporting with respect to RBI. So this is a very, very important aspect as per the reporting is concerned. Here, like during the course of audit, it could be either internal audit or maybe statutory audit, any type of audit. If the particular internal auditor or the statutory auditor, he finds some kind of susceptibility of the transactions or any kind of susceptibility to one or more of these actions, then the auditor has to report to RBI. It is a must. So what are the different areas or what are the different areas where there could be some kind of susceptibilities? One is with respect to fraud or any kind of fraudulent activity. So any kind of fraud or fraudulent activity that comes to the notice of the auditor, or act of excess power. I told you in the central government report to the central government also, you'll mention whether all the transactions are within the powers of the bank. So if there is any power, abuse of power or act of excess power, the transactions are authorized by a person who doesn't have the power to authorize that, or within the powers of the bank, they are approving more amount or transactions, such areas where there is an act of excess power, also I need to bring in. Then any foul play or any kind of a irregularity with respect to transaction, some suspicious transactions, that also if it is encountered during the course of internal or statutory audit, it has to be brought to the notice of RBI through a report. So reporting to RBI any susceptibility with respect to fraud, fraudulent activity, suspicious transactions, any foul play or act of excess power, all this it should be referred to the regulator. Now, if the auditor is deliberately not reporting it to RBI, then he will be liable for action. So if it is only deliberate failure, say suppose it is not as per the samples what he has selected, the checking whatever he has done, verification, he is not finding it, fine. But deliberately if he is not reporting that particular failure on the part of the auditor, then it will be liable for action. So mostly any kind of susceptibility with respect to all the three, it should be reported by the auditor to RBI. Now, again the auditor, I told you apart from this reporting to RBI, generally the auditor should be responsible for obtaining a reasonable assurance. So this we have been telling from the start of the session, like starting from auditing class 1 in my e-learning there's virtual sessions, I have been telling about reasonable assurance. I told you the highest level of assurance that the particular auditor can give, because your audit evidence is always persuasive in nature. So it is not an absolute or a conclusive audit evidence. So because of that, your assurance can only be a reasonable assurance. It cannot never be an absolute assurance. So auditor, and that is the highest level of assurance that can be given by the auditor. Now, auditor who is conducting the audit has to give a reasonable assurance, has to obtain a reasonable assurance that your financials are representing a true and fair view. It is free from any misstatement, either it could be individually or in aggregate. So that is again another thing. Now, if he finds across any instance like that, then it should be reported to the chairman or managing director of the concerned bank. So in addition to the report to RBI, it should also be reported to chairman, managing director of the bank. So this is with respect to your reporting to RBI and supplementary matter. Now the last part is with respect to report based on Companies Act, reporting on frauds based on Companies Act. So as per Companies Act, section 143 clearly mentions any fraud or any amount of fraud, if it is more than or it is involving an amount more than 1 crore at any point of time, and if that fraud is committed by the company by its through its officers or through its employees, then the auditor should report the matter to central government within a particular time. So this is another requirement as per Companies Act. This is apart from your normal reporting to central government and RBI. So as per the Companies Act also, it specifically tells any amount, any fraud with respect to an amount involving rupees 1 crore or more, if it is committed by the employees or by the officers, it has to be reported to the central government. So this is with respect to the auditing aspects. So we'll just have a quick recap of what we covered in today's session. So this is a small session with respect to audit of accounts, covering the few aspects of audit alone. One is with respect to who can be the auditor. Any auditor who is eligible to be the auditor of a company can be the auditor of a bank as well. Powers of that auditor will be same as that of the powers conferred to a company's auditor. Access to the books, records, vouchers, books of accounts and all. Verification of that. All the powers whichever is given to the company auditor will be given to this bank auditor also. Now coming to appointment. Appointment basically 3. For banking companies it will be done by the shareholders at the AGM. Nationalized companies it will be done through the board of directors, and RBI approval is also required. SBI it will be done through the controller and auditor C&AG after consultation with the central government. Now remuneration, again for banking company it will be decided by section 142 of Companies Act. Nationalized banks and SBI both together it will be decided by RBI after consultation with the central government. Now auditors report, I told you there are 3 reports. Basically 3 reports. First, in the report to central government he has to mention whether the financial statements are representing a true and fair view, whether the transactions are within the powers of the bank, whether he is obtaining adequate returns for verification for the purpose of his audit from the branches, and any matter he finds should be reported, like any kind of irregularity or fraud, that also need to be indicated. And he should also indicate other informations pertaining to the requirements of standards in auditing with respect to number of unaudited branches, quantify the audit deposits and advances, interest, income and expenses for these branches, and also other matters covered by section 143. And we also saw that CARO is not applicable to banking companies. Then we covered LFAR. So LFAR is as per the RBI circular. So banks auditors are dealing with the bank audit, they have to also give the LFAR long form audit report before 30th June of every year. And again, this executive summary, any key observations or significant matters can also be included in the LFAR. Now, reporting to RBI. The next one was reporting to RBI. We saw the reporting to RBI basically any kind of fraudulent activity or any kind of suspicious transactions or foul play in the transactions or act of excess power with respect to the transactions. All these should be reported to the RBI, and any kind of a deliberate failure from the part of the auditor shall be liable for action. So we also saw that, and also in addition to that, auditor should be able to give a reasonable assurance about whether the financials are representing a true and fair view. It is free from any material misstatement. Either it could be due to error or fraud. And now, in addition to giving the report to RBI, he also needs to give it to the chairman or the managing director, chief executive of the bank. So then we saw the last requirement with respect to fraud, how the frauds are reported with respect to Companies Act. So this is section 143 of the Companies Act. So as per section 143 of Companies Act, we saw any kind of fraud which is involving an amount of rupees 1 crore or more than 1 crore. And if this fraud is committed by the employees of the particular company, if it is committed in the company by the employees or by the officers of the company, then the auditor has to make sure that it is reported to the central government within such time. So this is with respect to fraud, amount quantified 1 crore or more. So this is another duty from the part of the auditors to report as per Companies Act. This is as per provided by the Companies Act. So we saw with respect to central government, with respect to RBI, with respect to the managing directors or chief executive of the bank, any kind of irregularities or no reasonable assurance is being provided, then whether the financial statements are not representing a true and fair view, it also has to be reported to them along with RBI, and this with respect to fraud. So these are the basic type of reporting requirements of the auditor with respect to audit. So we'll see in the next session with respect to other aspects of bank audit. So till then you can just go through that. Thank you. So thank you. We'll see in the next session.